Hi everyone, welcome to Tuesday. So like we do every Tuesday, we go and take a look at the performance of the main board for the New Zealand Stock Exchange, being the NZX 50. Now before I jump across and share my screen, I have to do the housekeeping, and of course that this is for educational purposes only. No way is it intended to be personalised financial advice. If you're looking for that, you do need to go and have a chat to your own financial advisor. Now also just letting you know, coming up that on Thursday, I'm going to do a review on Europe ESG smart shares. You might want to come back and have a look at that. It's quite an interesting one that popped up on my research recently. Also, if there is any shares that you would like me to review for you, happy to do so. Definitely doesn't have to be on the New Zealand market. Just let me know in the comments and we'll see what we can do for you. Right, let's have a look at the performance for the New Zealand Stock Exchange for last week. So here we go. Here's the NZX 50 gross index up, and if I move that along, look at this. We have hit another all-time high, which sounds quite dramatic. It's only just edged up. If I look at last week or the week prior, it closed at 13,696, and last week it closed at 13,718. So it's edged up ever so slightly, but that is a very good sign, and you can see where it closed by that dashed line, which is fantastic. If I go out to all, you can definitely see that it did get up towards that high sort of around January 2021, but it never actually reached that top peak. It might have been trading, had a few days where it was really close, but it never hit that. So this is really encouraging to see. I'm feeling quite excited because our stock exchange has been a little bit of a laggard for quite some time. If I zoom in here, that last candle that you can see for the week is a very encouraging candle. Reason being is the wick that you can see at the bottom, or the tail, that is quite a long tail, which indicates that there is a lot more buying pressure than selling pressure. So the wicks at the top indicates selling pressure. Obviously, the wicks at the bottom, the longer they are, the more buying pressure on that there is. So that is a really good, encouraging sign to see. If I look down the bottom here as well, this is the volume chart. Not heaps of volume, but there is a bit more than the previous week. So last week there was about $42.8 million worth of shares traded, whereas the week before there was about 21, so a little bit more than double the volume. So it's a really good sign. So I'm feeling pretty encouraged by our share market. Let's go and have a look at the 1 year chart and see what that's telling us. So last week we did have a couple of days where it sold off, but the interesting thing here, if I zoom in, so this date here was Tuesday. The market actually opened higher than where it closed. You can see that by that red candle. So it looked like it perhaps opened at around 13,656 and it had a close of 13,597. But then the next thing is, even though that next candle on Wednesday is a red candle, we've got that gap forming. So that's quite interesting. So the market opened a lot higher. So the market actually opened at 13,757, closed at 13,722. However, it's nearly 200 points higher than where it closed on Monday. So that's really interesting. Then we saw Thursday, Friday. They didn't really go anywhere, even though they were both positive days. Friday's close was only slightly higher than Thursday's, which is quite interesting. But you can see down the bottom that there was quite a bit of volume on Friday. Now, if you see quite a bit of volume and you've got a green candle, that is a very positive sign. However, if you have a lot of volume and it's a red candle, that can be quite a negative sign. Obviously, you can have it the other way too. So Thursday here, there's very little volume, but it was obviously a red volume day, but you can see that the market, in fact, had a positive day, which is good. It's what we want to see. Now, let's go back out. Just gone back to the 1 year and just zoomed back out. Now I'll put my moving averages on. So when we're on the 1 year chart like this, we are looking at daily candles. So I'll just change that to a 30 exponential. Here we go. So the market's trading above that 30-day moving average. That's good. Let's also put on our 15 period moving average. Like I often say, nothing spectacular about these moving averages. They're the ones that I use in my methodology. When you're using moving averages, it's really important to keep using the same ones time and time again, because then you're going to get more consistent results. Different moving averages will also give you the same results, but be consistent with it. So I use the 30 and 15. I know of people that use the 150 day. Sometimes there are people that will even use three moving averages, like the 100, 50, and also the 30-day moving average. Just whatever you do, make sure it's the same each time, and then that's how you get that consistency performing. So you can see there that we are trading above both of those moving averages. Like I just said, a really good sign. Naturally, with that market coming back on Wednesday, it did come right back to that 15-day moving average, but it, just zooming in there, it's nothing to get too concerned about. Interestingly, though, when I look back on the daily chart, normally when I do my research, I use the weeklies, but obviously taking a look at the daily to see what's happened. You can see that that blue line being the 15-day moving average crossed through the 30, and that happened at around mid-December last year, and then it crossed to the upside. So that's when the blue line crossed through the red line, and that happened Christmas Eve, actually. It crossed above, and since then the market has been performing quite strongly. Let's also jump over to the 5-year chart and see what that's saying. Now, because I've gone to the 5-year chart, it's made these candles weekly, and that's how I do all of my research. It just cuts out that little bit of noise for me, which you have on the daily charts. I'm a bit of a longer-term investor or trader, and so I'm not into really watching what's happening every single day. I just like to have a checkup once a week and see what's happening with my shares and change any stop losses, that sort of thing. So you can see here, if I zoom in, the moving averages crossed to the upside at around June last year, and then the market's been performing really strongly. And if you take a look at this, we get a couple of red candles every now and again, but then it's interdispersed with quite a few green ones, and that is exactly what we want to see in a rising market. I always describe it as it's a little bit like breathing. You've got to take a breath in. You can't keep breathing out. And that's how I look at the share market as well. So red candles where we have a bit of a down day, it's not necessarily a negative. It's just what happens from time to time. We all do it. So anyway, I hope that's helped. If there is a share and review that you would like me to take a look at for yourself, drop it in the comments. Happy to do so. I do read all the comments, and your input into this is really, really vital. So yeah, come back on Thursday. Take care.